I put a G, a fat stack, a whole rack, 1,000 schmeckles, doubloons, bread, that lettuce, if you will, into JEPI and JEPQ. I did the same thing for SPYI and FEPI, and I put a little bit of guap into CONY and TSLY as well. I just gave you 8 ways to save money. I'll take my like now, thank you very much. I bought JEPI with the intention of making money without doing anything. I wanted to build a golden little piggy bank that I put money into, and magically it would start making me more money. I mean, look at that dividend yield. It's like a McDonald's medium-sized soda. That means it's abnormally large, and you question if you should have that much at one time. Social commentary over. My position in JEPI was worth $1,000 since roughly December of 2023. In that time, the position paid out 4 dividends: $7.78 in January, $5.51 for February, $5.54 for March, and $6.39 for April, totaling $25.22 for doing nothing. So that's 2.522% for the first 4 months of the year, and if the trend continues this year, that would total a dividend yield of 7.566%. What about JEPQ? My position was worth $1,000 since roughly December of 2023, and again, in that time, 4 dividends were paid out: $7.82 for January, $6.86 for February, $7.69 for March, and $8.70 for April, totaling $31.07. So that's 3.107% in 4 months, and if the trend continues, that's an expected dividend yield of 9.321%. On to SPYI. So my position was worth about $1,000 in December of 2023 again, and since then, 4 dividends were paid. The December 2023 dividend was $5.09. The January 2024 dividend was $10.27, February was $10.53, and March was $10.73. The reason why the first dividend was basically half was because I didn't have all $1,000 invested after the ex-dividend date for the December dividend in 2023. If I did, the dividend would have been double or closer to the other dividend payouts. So in total, I earned $36.62. For the year 2024, I've earned so far $31.53, which is 3.15% in 3 months. If the trend continues, that's an expected dividend yield of 12.62%. All right, now for FEPI. My position was worth about $1,000 in December of 2023. Since then, I've been paid 4 dividends. In January 2024, I made $21.51. In February, that dividend payout was $21.81. In March, it was $22.32, and in April, it was $20.96 for a total of $86.60 in 2024 so far, or 8.66%. If the trend continues, the expected dividend for the year would be 25.98%. So in total, so far in 2024, I've earned $174.42 from these 4 positions. But obviously, that's not the whole story. There's 2 more covered call ETFs in this portfolio that offer extremely high yields, but their covered call strategy is a little different compared to the other 4 we just went over. In addition, covered call ETFs have their pros and cons, just like every investment. They are naturally going to limit the upside and capture the downside, but they do have the ability to generate massive yield. May the best covered call strategy win. When it comes to dividend investments, it's my observation that investors have to pick 2 of these 3 things: either a high dividend, a safe/consistent dividend, or capital maintenance/appreciation. And if we're being honest, you usually don't get the capital maintenance and appreciation and a high dividend combo. Finding something with all 3 is incredibly difficult at best, but we all know that time in the markets beats timing the market, which might have a benefit to maintaining and appreciating the overall position. So for the yield max ETFs, CONY and TSLY, I'm hoping that if I continue to compound during downswings, it will pay off on a following upswing. But I do want to be very clear, these are the riskiest covered call options I know of for investors, and the performance is going to depend on the fund's strategy and the underlying stock, which of course, no one actually knows how that will turn out. This is a great time to mention, this is just my personal portfolio and not financial advice, of course. All of these positions in the video serve as me having some skin in the game, so I can keep track of the ETF's performance directly, because if they prove to be viable long term, it might be a good option for more capital in the future when my investment needs are more income oriented. So in December of 2023, I bought $500 worth of CONY, and it's paid out 4 dividends so far. In January of 2024, it paid $45.63. In February, it paid $20.39. In March, it paid $33.12. And in April, it paid out $58.98 for a total of $158.12 in dividends for 2024 so far. If that trend continues, that would mean a 94.872% dividend yield on my initial investment, which sounds insane. And for TSLY, the ETF had a reverse split in February of this year, so Robinhood history isn't showing on the app like the other positions. But this is a great time to go over the most important factor: if these investments actually turned a profit or not, because the numbers don't lie. For JEPI, the position has returned $29.64. JEPQ returned to $99.21. SPYI returned $16.05. FEPI lost $58.85. CONY lost $64.09. And TSLY lost $205.15. So of those 6 positions, I am actually down $35.26, with the heaviest losses coming from TSLY and CONY, and closely following is FEPI. Understandably, this is where most people would say, okay, time to sell the losers and double down on the winners. But here's why I'm not going to do that. First, 4 months is basically no time at all to see how these strategies play out, and these positions are individually small enough to where if any one of them goes to zero, or even multiple or all of them, I would still be fine. So I don't lose sleep on these losses because I've managed my risk. In addition, I'm okay holding because these dividend yields are so high that there's a chance for my losing positions I can accumulate more shares, which has a more beneficial effect when things are trading lower. That's of course assuming a bottom eventually comes in, so riding this to zero is a very real possibility as well. Fun reminder not to follow me or anyone else blindly and get lured in by huge dividends. As you can see, losses are possible. And just to round out the video, you can see my cash position in this account is worth almost the same as all my covered call ETF positions combined, and SCHD by far is the largest individual holding. Of course, there's a tiny amount of Bitcoin, Ethereum, and Dogecoin in there as well that I dollar cost average into on a daily basis. Will it work out for these positions long term? I have no idea, but I'm willing to continue to hold and reinvest the dividends because a $1,000 position and a $1 million plus position are still going to perform the exact same from a percentage gain and loss perspective. These positions let me control my risk, but also give me clear, first-hand knowledge into how they perform in various markets and against different covered call ETFs with different fund managers and strategies. So I'm just going to sit back, invest, and do nothing, because either way, I'm gaining. I'm gaining shares from reinvesting the dividends, and I'm gaining time in the market for the positions themselves. So hopefully that turns into gains in the overall dollar amount of the portfolio for my little golden piggy bank in the long term. Thanks for watching. I'll see you in the next video. Have a good one.